our today's webinar, which I hope will be interesting and helpful for you all. And while I let a minute or two for other participants to connect, because we had quite a number of online participants registered, let me please quickly remind you of the technical aspects of how this webinar will be going. So obviously I will start with my presentation, but you have a chat box on your screen, and you can use it to ask your questions whenever you feel relevant. I will most probably address them in the end of my speech in order not to interrupt it, but please feel free to ask them anytime to make sure you don't lose your thought, because the webinar will be dedicated to several topics today. So speaking about the idea of the webinar and what it is dedicated to, basically it was inspired by two main topics which I would like to address today. The first one is obviously transfer pricing compliance, because we are entering the new season of transfer pricing tax audits, which is basically just around the corner. But this year will be the first one when the audits can be carried out under the new rules that I have already addressed under various previous occasions, but however, I will remind you of. The second topic which I would like to address is the regulatory and tax aspects associated with administrating the cross-border payments and cross-border operations involving Russian counterparts. We see that they are, unfortunately, or fortunately, whatever, they are becoming more and more complex over time, and new payment rules and new payment scenario need to be found. And this is becoming a compound exercise, but these transactions are still on the market, and the practice, the way it evolves, give rise to some new questions and new solutions on the table. So this being said, please let me proceed with the first topic. As I mentioned, this would be the transfer pricing compliance aspects. So the first subtopic which I would like to pay some attention to today is the qualification of the so-called multinational group of companies, or an MGC, which is a Russian equivalent of an M&E under the Russian transfer pricing rules, and why it is important. So for the next slides, I will be actually using the abbreviation MGC because it is more accurate under the Russian rules, but please keep in mind that this is a Russian equivalent of an M&E and is a very much an OECD-based concept. So, and in fact, this topic is not entirely theoretical. There are two main issues which now bring it on the radar and bring it on the table. The first one is that among multiple changes to Russian transfer pricing legislation, there was a change to the definition of the MGC and the MGC perimeter. So basically, there are two main factors which constitute an MGC or lead to the group qualification as an MGC. The first criteria is the most simple one. It's actually the second criteria that you can see on the slide, is that this group should include at least one Russian tax resident and at least one non-Russian tax resident. And the second criterion is a little bit more complex. So previously, in order for the group to qualify as an MGC, there should be a consolidated financial statement prepared in respect to this MGC, either due to application of the Russian legislation requirements, or because the shares of this MGC or any of its MGC members are publicly traded, and the foreign exchange imposes requirements on preparation of consolidated financial statements. So as you see previously, the qualification of an MGC was basically a precondition to preparation of consolidated financial statements. Now it is no longer the case. According to the version of the tax legislation in force from year 2024, the MGC qualification may also be met if the consolidated financial statements are not prepared by the group, but they should have been prepared should this group or any of the members of its group be admitted to trading. And this change to the clause, which is, well, again, it's not exactly a Russian creation. It replicates the qualification of an MGC or an MNE that you may find in certain OECD member countries. However, this change to the clause in practice creates certain questions as on how the MGC perimeter should be defined. And this question, I can tell you, are not entirely addressed by the legislation or existing clarifications. There is a dialogue being held between the business community and the regulatory authorities, primarily the Federal Tax Service, on the matter. I can tell you that the business, at least one of the business communities that I belong on, prepares their proposals to the Federal Tax Service, and I was one of the authors of these proposals, helping the taxpayers to define the perimeter of an MGC. So we are waiting for these clarifications to be published or to be somehow amended. So basically, what are the practical issues that we have on the table, and these are only some examples that I would like to share with you based on my practical experience with my clients, or also some other publicly available questions. One of the most important questions is how we define the MGC perimeter if such an MGC is under the control of the foreign members and not under the Russian control. And the main idea that the business community would like to address here is that if it is a group under the foreign law control, then the foreign law should be used as a guidance to define the perimeter of a multinational group of companies. So this idea was already present in some historical explanations of the Russian tax authorities coming from year 2021 or so. But of course, we want to see it on the paper for the future periods, considering the changes to the legislation that I already talked about. And this is actually an important question because I see in some of the jurisdictions like Germany, for example, there are specific legislation provisions due to which in certain cases the Russian subsidiaries are not, the financial indicators of the Russian subsidiaries are not included in the consolidated financial statements, and this is not like the will of the group, but rather the legislation requirements, because, for example, the control over such subsidiaries can be limited at the moment, considering the limitations on distribution of dividends out of Russia, and this is only one of the examples. Also, we have quite a number of practical questions in situations where when, for example, the Russian subsidiary is held in a JV with some Russian partner, and basically it belongs to two groups, each of which can formally qualify as a multinational group of companies, while each separately does not qualify its Russian JV as an MGC member. There is a number of practical questions when, for example, the participation interest in the Russian subsidiary changes due to multiple transactions we have seen on the market in the last 2 or 3 years. And you can say, and you would be right, that some of these questions are already addressed on the OECD level. If we look at the OECD guidelines, we can see the examples when these practical examples are being considered, but unfortunately at the moment no equivalent exists of such kind of clarifications in Russia, so this kind of question is really being in process of elaboration, and we will basically look and see how it will appear in the clarifications issued by the Russian tax authorities. So why is it important? And by this simple diagram, I actually wanted to stress your attention to the fact that first, the forms of the transfer pricing reporting in Russia are now quite complex, and you or your Russian subsidiary or your Russian counterpart may fall under the requirements to file various types of such forms, and you need to be prepared to it. And the second point is that not all of these forms of transfer pricing reporting are control transactions based. Basically, it means that even if you have no control transactions in some periods, you may still fall under the obligation to file certain transfer pricing reporting forms. Like, for example, the CBCR report, and I will talk in more detail about it on the next slide, but it may be requested, and it is requested. We see it in practice, even from the companies which are no longer active or are within the liquidation process, and they no longer maintain the control transactions, but they still fall within the MGC perimeter, so they can fall under this requirement. Equally, even if your Russian counterpart is not an MGC member but conducts control transactions, it is subject to certain forms of transfer pricing reporting, such as preparation of a transaction-specific transfer pricing documentation or notification on control transactions. And on intersection of these two main triggers for transfer pricing reporting, which is belonging to an MGC or fulfilling the control transactions, you have more complex forms of reporting, like, for example, a local file, which is very close in its content to a transaction-specific documentation, but a little bit more elaborated. So let me speak a little bit more about some specific forms of transfer pricing reporting. I will not cover all of them because maybe some of them might be too technical for the English-speaking audience, but I will focus on the one which are as a radar now. So the first one I would like to address is the country-by-country reporting, or a CBCR. And just by way of reminder, from year 2024, the new so-called blacklist of jurisdictions that systematically failed to exchange CBCRs with Russia is in force. And this new extended blacklist includes the majority of the so-called unfriendly states which stopped CBCR reporting exchange with Russia. So basically we have two main consequences of that. First, that in year 2024 we faced the mass CBCR requests from the Russian subsidiaries of the groups, or even historical subsidiaries of the groups, which no longer belong to international groups due to MBO or change of control or whatever, but CBCR is still requested for the previous periods. And second, we will likely face the further expansion of these requests in year 2025, simply because in year 2024 the requests were primarily made to those companies and those groups on which the automatic exchange stopped immediately in 2022. This is not the case for all of the jurisdictions, but from year 2023 the scope of such jurisdictions is extended. So what is necessary to keep in mind here is that first, for the Russian subsidiaries or ex-subsidiaries of international groups, it is an obligation to file the CBCR if the request from the Federal Tax Service takes place. The time term for filing this request is specified in the request made. It can be no less than 3 months. In practice, what we see now in most of the cases, it is 6 months. And the second point is that in the well, in the vast majority of the cases, I mean, in all of the cases when the group is under the foreign control, the input from the group is required, because filing the CBCR report based on the data available in the Russian perimeter is normally not possible. And here we have a number of technical questions arising. First of all, you need to keep in mind that in Russia, the CBCR should be filed in specific format elaborated for Russia. So even if the Russian subsidiary is likely to get the CBCR in the XML format in which it was filed in a foreign jurisdiction, it will still need to be reformatted, because Russian Federal Tax Service will not accept the CBCR report in the format it was filed abroad. And this is quite a comprehensive exercise, I can tell you from practice, because although Russian CBCR form is very much OECD based, it is not a 100% equivalent, and normally some kind of information needs to be additionally requested or addressed whatsoever. Of course, another material problem that we see is that the groups are reluctant to share CBCRs with the Russian subsidiaries. And on the other hand, from the side of the Federal Tax Service, there is a clear message that there will be no mercy, and the Russian taxpayers should think in advance on the way they will get this data from their groups, even also when they exit the group. But from my practice, at least from my client portfolio, I can say that in the majority of the cases, the negotiations with the groups are successful. And in the majority of the cases, the foreign groups, they give CBCR in the end. But this negotiation may require additional efforts. And here you should keep in mind again that even if the company is inactive, and even more importantly, is within the liquidation process, it doesn't release the company from its obligation to file CBCR. And even more, the liquidation process may, for example, be postponed until the company files the CBCR. Well, what I can also unfortunately say from practice is that quite obviously the Federal Tax Service was neither prepared to such a volume of CBCR reports being filed, which gave rise to certain technical issues, quite similar one for various taxpayers arising. For some of my clients, these technical issues are still not being resolved, and this is subject to additional discussion with the original tax inspector, who in their turn contacts the Federal Tax Service. All this takes time, and you should consider this additional timing when you get the report, when you get this sort of request, in order not to delay it until the very last moment. What is also important to note here is that from year 2025, Russia on its side also materially limits the scope of CBCR exchange with other countries, which will not really materially change the picture in Russia, because as I mentioned from the previous year, we already face the mass CBCR reports in Russia, but it might give rise to the secondary requests abroad. So you may need to consider it as long as your group is multi-jurisdictional one. So another form of the reporting that I would like to speak about in a bit more detail is the requirements for the transactional specific documentation, so the basic transfer pricing documentation being prepared in Russia. And please keep in mind that similar requirements apply to the local file, which, as I mentioned at the beginning of my speech, is basically the same thing as a transaction-specific documentation, but just a little bit more elaborated. So what is new here is that certain kind of information becomes obligatory. Well, it became obligatory from year 2024 to be disclosed in the transfer pricing documentation, meaning that in year 2025, when the 2024 documentation can first be requested, you will need to report under the new rules. And what we see here is that basically, since the exchange of information with Russia is now being limited. The tax authorities are trying to retrieve the information they need from the taxpayers. And this basically shifts the administrative burden of these taxpayers. And this primarily concerns the information which needs to be requested from the foreign counterpart, and especially the related foreign counterpart, and it concerns the financial data, the information on income and expenses, the number of employees, the value of fixed assets or intangible assets, the registration data, and the confirmation documentation. So why I'm telling this in this detail, in order for you not to be surprised when you face this kind of request from your Russian counterparties, because they really need this data. And the second point that I would like to highlight here is that the approach to documentation of transfer pricing policies becomes stricter. The use of the 5 basic transfer pricing methodologies becomes mandatory, but for some very limited exceptions. Also, the use of the sources of information specifically listed in the tax legislation becomes mandatory, which, as you see, in practice leaves less liberty for the companies when documenting their transfer pricing policies. And this is quite a sensitive question when we come to documentation of controlled transactions with unrelated parties. And let me remind you that there are three main types of unrelated party transactions which may fall under the transfer pricing control. All of those are cross-border transactions. So these are the transactions with the residents of the so-called offshore zones, the blacklisted offshore zones. These are the transactions involving goods from the list of the Ministry of Industry and Trade. Those are mainly commodities. And these are artificial intermediary transactions, which are, again, artificially put in place through an independent intermediary to avoid transfer pricing complications. So out of these three, the most important one is the first one, because the list of so-called offshore jurisdictions was materially extended, and from year 2024, it counts all of the so-called unfriendly states, all the EU members, the USA, Japan, and so on. And basically it means that when the Russian taxpayer contracts an unrelated counterparty from these so-called unfriendly jurisdictions, upon exceeding the threshold for transfer pricing control, which is 120 million rubles, these transactions falls under transfer pricing requirements, and the Russian taxpayer needs to document this transaction for transfer pricing purposes and need to prove that it is arm's length. And unfortunately, in combination with previous changes to the law, which makes the transfer pricing documentation more regulated and more complicated, the Russian tax authorities this year issued an official clarification stating that basically the unrelated party transactions need to be documented in the same manner as the related party ones, which of course creates a material burden on a Russian taxpayer. I had an experience of documenting the unrelated party transactions for some of my clients, and I can tell you that this is not a trivial task, because the unrelated counterparty is even more reluctant to share its financial data than the related party one, and the way you process this data is also limited, but you need to keep it in mind. So why is it so important? Why I speak so much about the transfer pricing risks this year is because they are materially increased. And in the next 3 slides, I will remind you and give you some example how they increase arithmetically over time. So just by the way of reminder, from year 2024, which again is first documented and first tested in year 2025, we have the new rules in place, according to which first, when the prices or the profitability, depending on the methodology used, deviate from the arm's length level, and provided that this deviation is revealed by the tax authorities in terms of a tax audit, they will make the adjustment of the tax base, the transfer pricing adjustment, to the median value and not to the minimum or the maximum value. And this already brings much in terms of the tax base adjustment. You should keep in mind that when the voluntarily transfer pricing adjustment is on the table, the taxpayer is still entitled to use the minimum or the maximum values, which is specifically formulated this way to indulge the taxpayers into the voluntarily TP adjustments, but for the tax authorities, the median value is a rule. The second point is that as long as the cross-border transactions are at stake, if the deviation from the arm's length level is revealed, this adjustment of a tax base of a Russian taxpayer will also be subject to the so-called secondary transfer pricing adjustment, meaning that it is equated to dividends being paid out of Russia, subject to a 15% withholding taxation. There are certain rules which allow to relax this application, like the transfer pricing, the secondary TP adjustment concept does not apply if the taxpayer voluntarily adjusts its tax base and its foreign counterparty returns the overpaid cash to the Russian bank account of a Russian resident within the time terms stipulated in the law. But in all of the other cases, the secondary TP adjustment rule applies. And as you can imagine, in the current circumstances, obtaining the refund to the Russian bank account of a Russian taxpayer is not always practically possible. Since these rules are very new, they're still being clarified by the Russian tax authorities. So we saw some official clarifications appearing in the end of the last year or in the beginning of this year. Some of these clarifications are quite positive, like for example, they confirmed that the remaining, the surviving double taxation treaties will apply to the transfer pricing adjustment amount. Although I can tell you there are still some technical questions on the table on how this is going to work, but at least this is a concept. The other clarifications are not so positive, like for example, when we speak about these exemption rules that I was just talking about, when the funds should be returned to the Russian bank account, the Russian tax authorities mentioned that only physical refund counts. Other ways of settlement, like for example offset, don't. And this is quite a technical issue, I can tell you, and this is even an open question for me, like a transfer pricing expert, how it's going to work. Like, for example, for some transfer pricing adjustment scenario that we see in practice for many years, when the transfer pricing adjustment is calculated in the fourth quarter of the year, but is offset against the future supplies. And this particular question I addressed orally to the head of the transfer pricing department of the Federal Tax Service when I had a chance, and she confirmed to me that this historical scenario should still work, but in practice, again, we will need to see how feasible it is given the new rules. So this is, guys, just a reminder for you how materially the fines, apart from these changes to the tax base calculation, which I just mentioned, how much the fine increased for the transfer pricing offenses, like administrative fines for non-reporting, like almost in most of the cases are 10 times higher, sometimes 20 times higher than they were before. But most importantly is that if the price is considered to deviate from the arm's length level, and this happens within a cross-border transaction, the fine is the amount of the tax applicable on the secondary TP adjustments, this is so-called 15% withholding tax, will apply. So this is a practical example which I actually like very much. I think it is very illustrative, even though it is a simplified one, explaining how the calculation of the tax base and of the transfer pricing tax risks changes under the new rules. So on the green side of the slide, you can see how it works under the old rules, and let me guide you through very quickly. Like, for example, let's take a simple case when we speak about some export transaction, and the price applied by the Russian taxpayer was, let's say, 200 rubles, and the tax authorities come and say, well, from the minimum to the maximum range is 250 to 350, so you have 50 rubles deviation from the minimum value of the arm's length range, and out of this deviation you pay tax as a 20% tax rate, which makes 10 rubles. You pay penalty, which is 40% of the underpaid tax, and this is 4 rubles. And the total amount of tax liability in this example, you have 14 rubles, and this is excluding the late payment interest. So interestingly, how it changes under the new rules. So the example is the same. We have 200 rubles price under the export transaction. But first, the transfer pricing tax base adjustment is already made by the tax authority to the median, which in this particular example is 300 rubles. So the tax base adjustment amount is already 100 rubles instead of 50. Then we come to the amount of the CIT, which is 20% if we speak about year 2024, and 25% if we speak about 2025 and onwards, because we had an increase of a tax rate. Then on the top of this, you have a withholding tax payable in the amount of 15% of the tax-based adjustment, which is another 15 rubles. And the penalty that I spoke about, which is in the amount of the withholding tax, so it makes another 15 rubles. On the top of this, according to the explanation of the tax authorities, the taxpayer also pays the penalty from the underpaid withholding tax amount, which makes 20% out of 15, another 3 rubles. And in total, in this example, you have 53 rubles if we speak about year 2024, or 58 rubles if we speak about year 2025. So as you see, it is almost 4 times higher than it was before, and this is already very sensitive. In fact, it can go, like in this particular example, it can go up to the turnover amount for the tax-based adjustment. So what to do now? Why is it so important? From 1st of June 2025, Russian tax authorities are entitled to request transfer pricing documentation for the year 2024, which is subject to all these new rules that I have been talking about. And as always with a health checkup, it is better to anticipate than to address the issues that are already on the table. So what you or your counterparties should really do is first determine the list of the control transactions, including the transactions with unrelated parties that I have been mentioning. Second, to assess the qualification of the group as an MGC or Russian equivalent of an M&E, considering all the technical issues on the table that I have been talking about. To check what you have in terms of the transfer pricing reporting in your hands, because, well, it's a practical case that I see very frequently, that the transfer pricing reporting forms are only updated every 3 years or every 5 years, and this could be a viable solution. But if you need to update your transfer pricing file, now is the time, because now the new rules apply. Well, and apart from that, there are more technical issues like checking what transfer pricing methodology you use. Is it still viable? What contract is it in line with your contractual documentation, and what do you have in place? Do you have sufficient data to meet the new extended reporting requirements? And if not, it's high time to act. So in order to help businesses in this situation, we have launched the transfer pricing checkup solution, You can see the QR code on the slide, and the description of this offer will be circulated to you together with the presentation materials. So please, whenever you feel necessary, feel free to address this TP checkup solutions that we have. And the first limited checkup, as explained in the leaflet, is free of charge. So please feel free to address us and to address me in case you have any questions or concerns. So moving to the next topic, which I would like to address, are the intergroup operations and primarily the intergroup services, operations, services, payments, which are back under the radar. So, well, to be very honest with you, it was never off the radar of the Russian tax authorities. It was just also only the question of how visible or how sensitive or how important or how risky your operations are in the eyes of the Russian tax authorities. But on the other hand, I already see among my clientele and also in the business communities that I belong to, and those are plenty, that there is a rising interest from the Russian tax authorities to this kind of operation, also to the ways they were documented starting from year 2023, when the double taxation treaties have been suspended, and we already see the new requests which are even out of the tax audit, out of the tax audit procedures being placed. In my experience, the tax authorities are mainly now collecting the data rather than processing it, which will likely be the next step. But if you have this kind of request, make sure and be ensured that you are under this radar. So what is important to remember here? The first one, and the clients who work with us know that such notions as economic justification and proper documentation is a mantra. And indeed, I have unfortunately seen multiple cases when the expenses for the intergroup services have been challenged or have been voluntarily non-deducted simply because the proper documentation is missing. And well, it will be fair to say that Russian documentation requirements applicable to intergroup services are intense, but as always, you know, it's easier to cut an elephant in pieces. And when you start processing, when you start communicating with the various groups and various teams around the group, you may find out that this task to document the intergroup services operation, it is complicated. Yes, it is time consuming, but it is not impossible, because if you have real services in place, if you have teams involved, you should start asking, like, what do you do? How do you document it, even for your internal purposes? And in most of the cases, not in all of them, but in most of the cases, you will find the answer. And here you need to keep in mind that voluntarily restraining from deducting the intergroup services costs is no longer safe harbor. Quite the opposite, the tax authorities tend to pay particular attention to this kind of cases, because for them it's a sort of a red flag being put by the taxpayer, illustrating that he is in doubt that this particular operation is properly documented or sufficiently justified. And this may create not only the tax issue, and in terms of taxation, we have the withholding taxation, not only the deductibility issues, we have the VAT, but this could also give rise to a currency control offense. And the fines for the currency control offenses in Russia may sometimes exceed even the tax burden. And this needs to be considered, Another thing which is no longer a safe harbor in the eyes of the tax authorities is the other IT services, because if you remember, like 3 or 4 years ago, 5 years ago, everybody more or less was saying that, well, this IT is more or less clear, and the tax authorities are rather focusing on some administrative stuff, financial stuff, and so on. This is still true. But for the IT services, however, the tax authorities may have their own points of interest, where one, are these IT services real in all current limitations we have with the use of foreign IT solutions in Russia? And the second one is, okay, even if it is real, Are those payments really made for the services, or are there any hidden royalties in them? And royalties are subject to a different withholding tax rate in Russia, which may give rise to a tax-based adjustment. And also, finally, what you need to consider is that transfer pricing documentation, again, of cross-border services might be a complicated task because we do not have the safe harbor intervals established for the intergroup services, even the low value-added services like exist in the OECD concept, and finding the proper approach to documentation of the services with the group, which might be either through aggregation of transactions or analysis on the level of a foreign service provider, or the requirement to rectify this foreign-based analysis if it exists. All this requires additional administrative efforts. Another very important point which I would like to address here concerns the transfer pricing tax adjustment. And here I would like to speak for a couple of minutes about the Oracle case. In fact, it is a very illustrative court case which should have appeared long ago, and so it did, which concerns the justification of deductibility of retroactive transfer pricing adjustments. In this particular case, this transfer pricing adjustment concerned the services flow, but some of applications and some of conclusions reached by the court may also be relevant for other flows. And those companies, those clients already working with us should remember that whenever the transfer pricing adjustment topic was addressed to us, we have always warned that it's a little bit of a slippery ground. You need to be very careful with how you elaborate the economic justification, how you document this transfer pricing adjustment, how you justify it. Because first you need to keep in mind that in Russian legislation we have a limitation which disallows making transfer pricing adjustments that are not in favor of the Russian budget. And this is the rule. And you need to keep in mind that the fact that the transfer pricing adjustment you are trying to make is not in favor of the Russian budget is alone sufficient to reject the deductibility of this adjustment. And in this particular court case, this adjustment was retroactive, and it was made in respect to the previous periods, aiming to reduce the tax base of the Russian taxpayer, and it was challenged by the tax authorities, and the court confirmed the position of the tax authorities, but the tax authorities did not even use these arguments that I was mentioning, which would have been sufficient alone. They just simply challenged the economic justification of this transfer pricing adjustment. Saying that the company doesn't have the history of this adjustment, the company did not sufficiently document, didn't disclose the profitability ranges on the basis of which the transfer pricing adjustment was made, and so on and so forth. Also, what is important here is that in this particular case, the company was aiming to report, to reflect this transfer pricing adjustment in the year for which the financial books have already been closed. And there was a reason for it, because this transfer pricing adjustment was relating to year 2021. It was only formalized in year 2022, but in year 2022, the company was already a loss-making, so there was no sense in the transfer pricing adjustment. So it tried to report it in year 2021, and the tax authorities did not support it. They said it should be reported in the year when you document it. So here's the correct question is, am I safe if I only report the transfer pricing adjustment in the following year when it is documented? And the answer is no, because you should also keep in mind that from year 2025, there was a change of a corporate profit tax rate in Russia. it increased from 20 to 25%, and Russian tax authorities already issued the explanations that any changes to the tax base of the previous periods should be reflected in this specific period, because otherwise it would lead to the artificial increase of tax being saved, and this is a no-go. So this needs to be considered. So just to summarize on this topic, I'm not telling you that the transfer pricing adjustment is impossible in Russia. We all understand, and we live the real life, that we, in most of the cases, in the majority of the cases, it is unavoidable. But you need to think very carefully of how you formalize it, how you justify it, because obviously just issuing a credit note and expecting a Russian counterparty to pay is simply not sufficient. And it is not only purely tax aspects that I have been talking about. There are also currency control aspects, and there are customs aspects involved, as long as the operations with goods are concerned. So another topic that I would like to speak about a little bit today is the current status of application of double taxation treaties and application of withholding taxation. So the good news is that we have some new double taxation treaties in force. You can see them on the slide, like UAE, Abkhazia, Malaysia, and Oman. Out of them, the most expected one is obviously the agreement with the UAE, with which we historically have a strong business operation, which flourished from year 2022. And the negotiations over this DTT stagnated for some period of time because of the withholding taxation formula that you see on the slide. But well, finally, the consensus was found. So in most of these agreements, you see the 10-10-10 formula applicable to main kinds of passive income, such as dividend, interest, and royalty. And as compared to historical now suspended double taxation treaties that you see on the slide, like for example France or Germany, this formula might look a bit less beneficial, but on the other hand, you should also keep in mind that the criteria for application of these reduced rates may also be relaxed to some point, like for example for dividends. If we speak about the UAE, there are no criteria which need to be respected in terms of share of participation interest or capital investment made. What is also interesting is, speaking about the UAE, is that the so-called other passive income is also taxed at source at a 25% rate, which may, for example, happen in case of a cross-border debt forgiveness with the Russian party acting as a creditor. This kind of a passive income will also be taxed at a 25% tax rate. So, speaking about the Russia-UAE DTT, what is also interesting here is that it provides very strong LOB provisions. So if you choose to benefit from this DTT, you need to be very careful with the substance requirements. On the other hand, this DTT applies to all kinds of residents, including the offshore residents. It may also apply to the transparent structures. And another important point, and this is quite unique for this DTT, if I could say so, is that the remote workers, or the so-called internet freelancers, the individuals working under the civil law arrangement with the Russian employers are taxed on a per employer basis, while the general rule of individuals taxation is the residency rules. I have a feeling that it was specifically made since the UAE doesn't have its own personal income taxation at the moment, and quite a number of Russian individuals used this jurisdiction for living and working remotely. So you need to remember that this kind of income physically received in the UAE by such remote employees will be taxed. In the end of this presentation, you will have a QR code for a more detailed overview of the Russia UAE DTT, which our tax team have prepared. So if this topic is of interest for you, please feel free to analyze it in more detail. So, as a reminder, what is happening with the so-called suspended double taxation treaties at the moment? Well, basically, they remain suspended, and these are the double taxation treaty with all of the so-called unfriendly jurisdictions. So, on the green part of the slide, as a reminder, you can see the foreign exchange. You can see the withholding tax rates applicable to the main types of passive income withheld taxed at source in Russia, and these are the rates applicable under the Russian domestic law. As a reminder, for certain types of income paid between unrelated parties, and it is important, only between unrelated parties, we have temporary relaxations in force until the end of this year. This is the case for some kind of royalties, for certain types of international carriage, and for certain types of interest payable under the loan arrangements. I'm sure that people who use this exemption are aware of the criteria for their application, because they're specific for each specific category of the income. So what you should keep in mind is that such exemptions are only effective until the end of this year. And at the moment, in the public domain, there is no information on intention to prolong this exemption. I can tell you that I belong to a working group of one of the business communities, which is aimed at helping those foreign businesses who consider returning to the Russian market. And one of the initiatives supported by this working group is to somehow prolong and extend these exemptions, because this is no secret that even major Russian businesses still benefit from international carriage provided by some foreign providers, but at the moment there is no surety about the reaction of the authorities to this initiative. So if these exemptions are not prolonged, the existing gross-up clauses will be activated, and under the agreements where no gross-up clauses are yet included, basically your Russian counterparts will be withholding more tax, and you need to consider this. So in fact, since we are already in the middle of year 2024, as long as these operations are of relevance for you and you apply these exemptions, it's high time to check your documentation and to see how it's going to work from year 2026 if the respective exemptions are not extended, and to see what changes might be required, and to go to the negotiation table with your Russian counterparts. Well, on this slide, you might find some examples of the reciprocal reaction of the foreign jurisdictions to the suspension of double taxation treaties initiated by Russia. So, and this reaction is different. It can go from just some intention to undertake further actions announced to full termination of the double taxation agreement, depending on the jurisdictions. And the most popular kind of reactions that we see on the market is either the mutual suspension or the complete suspension. What is important is that this information that you see on the slide is based on the official information published by the Ministry of Finance of Russia, which is why it might be not fully accurate or not fully up to date. For example, in this list, which is, by the way, bilingual, so you can get acquainted with that. In this list, I don't see Austria, which also announced its intention to suspend the double taxation treaty. And another important point here is that as long as this concerns the reaction of the foreign jurisdictions, and if it concerns your business or your operations, please come and check under the foreign law how it's going to work, what particular applications you will incur due to this reciprocal suspension. And the final, well, it's actually the pre-final topic, but the final one within the main topic of our today conversation, which is the cross-border transactions with Russian counterparties, is the settlements, the physical payments. And well, I will not stop much on this slide. We all know how difficult such payments are at the moment, and we have both the regulatory aspect here because we have new and new restrictions imposed either by the controlling authorities or by the banks to this kind of payments. We also have the legal uncertainty because the regulations are changing quite quickly, both in Russia and abroad. And we have, like I would say, more business-oriented issues here, which are the currency risks because the exchange rates are fluctuating very quickly. We have material delays in payments because each such payment is reviewed by a particular scrutiny. We have large commissions, and all this influences the map of the payment routes that we now see on the market. So this is no secret that the most frequent solutions that we now see on the market would be the use of the payment agents. And we have a large offer of such payment agents on the market already. But if you use this scenario, if you apply, if you agree to any of this offer, you need to keep in mind various regulatory aspects of how you formalize the operations with your payment agent and throughout the scene, and how throughout the payment chain on each step of this payment chain, because this may give rise to the interest of various authorities and give rise to various implications. Like, for example, from the tax perspective, what the tax authorities will review in the first place would be the status and the functionality of the payment agent, how his rights and obligations are being formulated, how the payment terms are being formulated, what kind of liability your payment agent undertakes, and how it's all going to work. Another point that the tax authorities pay particular attention to is the use of the so-called fixed exchange rate, the appearing forex difference, and additional conversion costs, because this is no secret that when the payment agent is involved, he will offer some kind of a fixed forex exchange rate, which may, in most of the cases, will give rise to additional costs for the Russian taxpayer, which are not exactly forex costs. And the way they will be addressed by the Russian tax authorities would very much depend on the way you explain the costs and formalize them. There is also a currency control aspect to this scheme, because Russian controlling authorities basically insist on disclosing the whole payment chain to them and explicitly mentioning the use of the payment agent in all of the contractual documentation, and they pay more and more attention to the schemes. And the fines, as I already mentioned, the fines for the currency control violation are really sensitive now. And the third aspect that we see here from the regulatory standpoint is the customs aspect, because the customs authorities also become interested in this kind of operation, and they start asking questions whether we should or should not include the remuneration paid to a payment agent into the customs value of the imported goods. And we already see some court practice being formulated here. I can tell you that the general principles that we see in the court practice and the official explanations would rather be that it depends on the role of the payment agent and on who involves the payment agent, because if the payment agent is involved by the purchaser simply because he cannot process this payment otherwise, this should not really form the value of the imported goods. But if vice versa, the use of the payment agent is imposed by the foreign seller, and this transaction is preconditioned to the use of the payment agent, then the payment agent's remuneration should be considered the part of the cost of the imported goods. But as you can imagine, this line is very thin, and explaining one or the other scenario to the controlling authorities could be complicated. It should be thought in advance when you enter the scheme. Even before this, when you consider it, you should think about these implications. And apart from regulatory aspects, of course, there are general legal aspects on the table. There are commercial aspects as what is going to happen if the payment is delayed, whose liability it is, and so on. So if I'm asked whether or not to use the payment agency scheme, I would say, well, in most of the cases, it is not even a question, because it is the only way to somehow process the payment, but you need to be very careful with the scheme. You need to engage your lawyer, have a look at this documentation, and think in advance of all the applications you may face. And another point that I would only like to highlight, I will not stop on this into too many detail, also because we're out of the timing, is that the payment agent scheme is no doubt the one used most frequently on the market, but not the only one. There could be alternative scenario. Some are more frequently used, like the transfer of the contract or the assignment of claims or debts, the offsets. Some are more exotic, I would say, like fiduciary management or use of the foreign accounts. But depending on your payment, depending on your goals, on the type of your transactions, of the operations you already have at place, there could be alternatives, and you need to consider them together with your business and your lawyer. Well, so this was the main topics that I would like to cover for today. But before we move to the Q&A section, I would like to contribute just a couple of minutes within the bonus section to one interesting topic that I came across when working for the international groups, like still present in Russia somehow. This is just, guys, to draw your attention to the situation that the foreign companies which engage somehow, the Russian individuals still engage for some kind of activities and use their works or services, or acquire some IP rights from these Russian individuals. And this is still the case for the game business, for the for the IE business, and so on. So these foreign companies, again, engage in the Russian individuals for some kind of operations, for some kind of online services provision, are faced with new obligations in Russia. Basically, the tax authorities shift the burden of individual taxation from these individuals to such foreign companies acting as a source of their income. And these companies are faced with the tax registration, tax reporting, and tax payment obligations in Russia. And these obligations are quite complex. I might tell you based on some examples I have with some of my clients. So, some of the foreign companies already registered for taxation purposes in Russia, like due to provision for the electronic services in previous periods, already received the notification letters of these new obligations, particularly potentially applicable to them. So my point here is that if you as a foreign company maintain some operations with the Russian individuals, you should probably check whether you might fall under this new requirement. So, colleagues, this is all for today in terms of my main speech. So on this page, you will find the QR codes for the latest DTT, for the latest overview of the double taxation treaty with the UAE, also the transfer pricing guide, which we elaborated with our team last year and will most probably update this year, as soon as the methodological clarifications of the tax authorities on the use of the new TP rules, which are highly expected this year, are enforced. And well, basically you will receive this presentation together with the TP checkup leaflet that I was talking about in the beginning of the presentation. So please feel free to contact me whatever question you might have in mind. So just a moment, please. Let me check the Q&A section to see what questions we have. So do you see any relaxation of the maximum amount to pay as dividend per month? No, unfortunately, no. The rule remains. It's still 10 million rubles per month, and this is 10 million rubles for all of the obligations which fall under specific limitations in Russia, which may include both dividends and interest under the cross-border loan arrangements. So far, there is no any like publicly available initiatives to somehow extend this amount or to relax these rules. However, well, as discussed in the business circles, this would be inevitable at some point in time, especially if some businesses decide to return to the Russian perimeter. And there are some suggestions from the business community how it could gradually happen, but so far so good. This remains on the level of initiatives from the business. But if a Russian citizen is not a tax resident anymore, there is no obligation to register as a tax agent, right? I assume this question relates to my last slide, this bonus section about the personal income taxation. And I would say it is more complex than that. There are like two different types of income which may fall within this perimeter. And one type of income which is related to online services provision is indeed linked to the tax residency of a Russian citizen, but there are other situations when, for example, the Russian citizen ceases to be a Russian tax resident, but still might use the Russian segment of the internet or the Russian bank account to receive its income. And then there is a combination of criteria upon which the tax agency applications may still imply, even if the Russian citizen is no longer a tax resident. So this question is a bit more complex. So your specific situation needs to be addressed as on how this Russian individual continues working for you, how he or she receives the cash, the income from you, and only upon this more deeper analysis, you may come to the conclusion whether or not the tax agency obligations apply. Am I right that practically any international company with turnover more than 1 billion rubles may be considered as an MNE? Well, no, not exactly. In fact, there is indeed a turnover criteria for a group, not for a group to qualify as an MNE. So the group may still qualify as an MNE, but in order for transfer pricing reporting applications to apply, there is also a turnover criteria that should be met. As this turnover criterion is either 50 billion rubles per the entire group, not the one entity. If this group is under the Russian control, or the turnover criterion defined by the foreign law if the group is under the foreign control. Like, for example, for the majority of OECD members, it's 75 million euros per group. So basically, you need to check the turnover criterion applicable to you, depending on whether your group is a Russian-controlled one or the foreign-controlled one. But sorry, you also touched upon very important question here. I didn't addressed it today, but this qualification of as an MGC or an M&E is important not only for the transfer pricing applications, but also for the currency control ones. Like, for example, we have the new requirements enforced from the last year on filing the reporting on the foreign accounts of the foreign members belonging to the same MGC or an M&E as a Russian member. And for these currency control applications, there is no turnover threshold. There are other thresholds that might need to be expected, like related to the composition of the assets and where they are located, but there is no turnover criterion here. So please let me see if there are any other questions to address. Okay. I already addressed the question of the tax residency. Okay. Am I authorized that 50 billion ruble criterion for the amount of turnover is applicable for the ultimate beneficial owner company? No, it is applicable for the group as a whole. So you check the turnover for the whole group, not for the one company. But you are right that, and it is connected to what I have been talking about before, that you check the status of your ultimate beneficial owner company to understand what threshold to apply. Is it a Russian one or is it a foreign one? And depending on it could be either 50 billion rubles if it is a group under the Russian control, or other foreign-based threshold if it is a group under the foreign company control. Can agents be used for paying dividends? It's a very good question. Well, in fact, yes, I can tell you that I have some practical cases when, for example, the Russian subsidiary has multiple participants, and making payments to different participants is too complex, in which case one of the participants acts as a payment agent to all other participants. So basically it collects the dividends from the Russian company and then transfer it to all other participants. It is possible under the Russian law, but this payment agency scenario requires additional analysis and additional formalization, because there are questions of how the withholding tax is being divided between the participants, how you formalize it, and also we highly expect that the Russian banks will be analyzing this payment chain up to all beneficiaries to ensure that the payment agent indeed collects and then transfers the cash. But if your question relates to the use of independent payment agents, I would say that from a legal perspective, the answer again is probably yes, because there is no specific limitation here, but you need to check with each specific payment agent, because I had an experience before that the payment agents were reluctant to address even such kind of payments as royalties, for example, not to speak about the dividends, but this is already a commercial question. $10 million for dividends before or after withholding 15% tax? That's a perfect question, by the way. Well, I adhere to the conservative position, because I see that more and more banks say that it is 10 million inclusive of withholding tax, because basically the withholding tax is part of the remuneration due to the foreign participant, which is just being withheld at source. I am aware of situations that some banks allow to charge 15% on the top of these 10 millions. There are still such cases on the market, but I, on my side, would suggest to be very cautious with this, because I spoke about this with our team specializing in counter sanctions regulations, and they told me, and I agree with them, like, see, like, look, we don't know how it's going to be addressed in the future. Even if you come to the bank and the bank allows you to make 10 million plus 15% tax, that does not release you from the risk that a year later the authorities will come to you and say that it was unlawful, you were violating the counter sanctions, and like look at the IKEA case or some other cases that we now have on the market. They are a bit different, no doubt, but still, which is why I would rather suggest the conservative approach, 10 million inclusive of withholding tax. But then it's a commercial decision, of course. But still, with agents, the maximum amount per month has to be considered for payment to non-friendly countries. Yes, you are absolutely right. And when I was talking about one of the examples that I had on the table, when we had like multiple participants in one Russian subsidiary, you should keep in mind that this is 10 million for all so-called unfriendly creditors, including the participants receiving the dividends. So the use of the agency scheme or some alternative schemes doesn't change the main rules. It should be 10 million per month per all non-friendly foreign creditors. Well, of course, unless you seek the governmental commission approval for a higher amount, which is not impossible, but complicated. Okay, thank you too. Okay, so well, at the moment I see no other questions in the chat, and we are already 15 minutes out of our time. So thank you so much for your time and for your patience today. I really hope that the topics addressed today were helpful and interesting for you. Again, you will receive the webinar materials, but if you come up with some other questions, if you choose to use our TP Clinics TP Checkup offer, please do not hesitate to contact me. I am always very happy to address any such questions. I even collect them for my business portfolio and business organizations that I belong to. So thank you again very much, and see you on our next event. Have a nice day.